The stock market is taking investors on a roller coaster ride this year. We are pro trader Jared Levy, the chief market strategist at Peak American Financial, with us now. Jared, you have traded your way through all kinds of markets. Let's slow it down a bit. What would you pick for a calm, conservative stock play?
Yeah, so in our portfolios that we manage, where I've been moving at least a portion of our funds to is an area called Dividend Aristocrats. So there's actually an ETF called NOBL, N-O-B-L. Okay. And basically these are companies, high quality companies that have paid dividends and grown them for at least 25 consecutive years. Like, that's pretty insane. So to me, these are, again, not the sexiest thing, but when you've made 20, 30% already and you're trying to kind of get defensive for the rest of the year ahead of this election, these are the companies that are kind of slow and steady wins the race, right? By owning the ETF, you can own a bunch of them. It's a very low cost ETF. And this ETF and this group of stocks has demonstrated historically during market corrections, these do not tend to correct as much. And in fact, it's about 50% or less of the correction. So that's what you like to see. Again, when you're a smart investor and you've got a bunch of different investments in your portfolio, this again is one of those additions that could calm things down and let you weather out the rest of the storm as we await, again, what the Fed's going to do, who's going to be president, and all these other questions we're kind of trying to digest right now.
An ETF is a basket of stocks. Can you talk a bit more about what stocks make up the S&P 500 Dividend Aristocrats ETF?
Yeah, so let me go ahead and this ETF, NOBL, is full of high quality companies. And let me see if I can get you just a couple. So C.H. Robinson, Walmart, Essex Property Trust, Air Products, which again, these are all things you'll find there's kind of a common theme here. A lot of them are, some consumer staples, some high-end retail, but like Colgate Palmolive, Amcor, a lot of very stable, large, just companies that, like I said, continue to grow their dividends over a long period of time. And a lot of them have grown their dividends for 40 plus years. And when that's happening, to me, they're returning to shareholders. And again, they've probably have more sound, less risky business practices.
Thank you for sharing your calm and conservative stock pick with us today.
Thanks, Angie.
Go to businessfirstam.com for where to see our show on TV.